Okay, so what we're doing is we are looking at the real rate. And what I want to do with the real rate, so this is the US 10-year real rate, I want to put in some peaks and troughs so we can get an idea of the trend. And what we'll do is we'll put in a reference trough over here, right? And let's just put in our reference peak over here. And then you can see we actually have a higher trough right over here. And followed by the higher trough is the higher peak. So we've actually got an uptrend. Actually got an uptrend for the real rate. Let's put it there. Okay. And I think that's noteworthy because rates tend to have a positive correlation to the US dollar and they tend to have a negative correlation to the risk markets. So as the real rate moves up, one would think that it acts as a support for the greenback and acts as a headwind for the risk markets. Let's just go ahead, take a look at the US dollar and the correlation. So what we'll do is we'll just press plus here and we'll add in the US dollar underneath. And let's just go ahead and put in the peaks and troughs, I beg your pardon, for the US dollar. So we can put in a reference trough over here. And let's just put in the reference peak right over there. And the higher trough right here. Okay. Now we don't have a higher peak with the US dollar. We actually don't have, I'm going to put HP higher peak, and we don't have a lower peak either. So I'm going to just put question mark. And so we just need a little bit more price action here. But if we get a lower peak, it would be interesting because perhaps the correlation is breaking, but we'll keep an eye on it. As long as the real rate keeps on moving up, I would think that it's going to act as a magnet for the US dollar. But in the meantime, we've got some sort of consolidation, some sort of sideways movement. And I think that we're just going to have to see if it breaks out to the upside or if it breaks down, right? But again, I want to just go back to that real rate and say, well, look, we're moving in this upwards direction here. It does seem to be suggesting that the dollar is going to be supported. And let's just put in a correlation coefficient just to um, corroborate the correlation between the two instruments. So what we'll do is we'll click on indicators and we'll go ahead, just bring up a correlation coefficient. And we'll put in US dollar. And you can see that the correlation here is pretty robust, right? It gets pretty close to 100%. Right now, we're on roughly about 68%. That's pretty strong. Okay, it's pretty strong. And at 68%, one would think that if the real rate continues to move up, it actually is going to bring the US dollar with it. All right, let's just take a look at the US dollar with a little bit more granularity. So let's get rid of the other charts and the drawings. Let's go ahead here. Let's just go ahead, bring up US dollar. And let's put in some indicators. Let's just put in 2 exponential moving averages and an RSI. So what we'll do is we'll click on indicators here. Under moving average exponential, just click on that twice. And the first one will make a 5 period. Make that green, lime green. And just right click on it and put it to bring it to the front. The second exponential moving average, what we'll do is we shall make that an orange 10. And what I want to do is I want to just bring this to the front again. All right, let's bring in an RSI as well, because I think that's going to help. All right, so in our previous screen, we saw that the US dollar is moving in some sort of triangular type of pattern. And in terms of looking at the RSI, if that oscillates around 50, that will perpetuate the sideways movement. In terms of going down to a daily time frame, you can actually see that we've crossed to the downside. So there is some pressure coming in on the US dollar. And that's quite interesting, just given the fact that the real rate has lifted some. So if we get an angle and separation to the downside, and if we get the RSI moving below 50, then we'll have some sort of downwards pressure on US dollar today. Let's just put this as a green rectangle. There we go. Now, the other point that we made is that if the real rates are moving up, it potentially acts as a headwind on the risk markets. Let's just take a look at a few of the risk markets just to see if there is some weight on them. We'll start off with the S&P 500. And again, we'll keep the EMAs and the RSI. Let's just clear off the drawings. Keep the indicators, clear the drawings. And what's interesting is that there was this big sell down on Thursday, and then that was offset somewhat by a broad rally on Friday. And what that actually resulted in the S&P 500 staying above 50. It did briefly try and break below, but we're back above 50 now. Why it's worth pointing that out is because as long as the RSI stays above 50, there's a positive momentum. And if there's a positive momentum, well, we're moving in that northeasterly direction. And you can see we've just recovered the 50 because of Friday. Just recovered 50, right? So what we'll do is we'll just keep an eye on those EMAs. And if we just zoom in here, let's combine Thursday's candle and Friday's candle. So what we can do is we can draw a line from the high, which would be Thursday's high, and actually it's got Thursday's low is the full range. Okay, so here's the full range. And what we can do is, where's the open? The open's over here on Thursday. So let's just put a little tick mark there. Okay, and where's the close? The close will be on Friday's close, which is round about there. Just put a little tick mark there, over here. Let me try that again. Yeah. Okay, so that's the candlestick. What kind of candlestick is this? Well, let's just put a box. We'll make it a candlestick, right? So what kind of candle is this? This is called a spinning top. It's a long-legged spinning top. So given Thursday sell down, Friday's recovery, there's somewhat of uncertainty in the risk market. Let's just keep an eye on the moving averages. Let's see if we get a positive exponential moving average cross, given the fact that there has been some sort of recovery on the RSI. But by and large, I think the markets are showing some uncertainty. Why would they be showing some uncertainty? The real rate's moving up. The real rate's moving up, right? Let's just take a look at DAX as well. Okay. What's interesting with DAX is there was this overbought condition that's now normalized, and we have moved into the area between 50 and 80. And what we'll be looking for is to see if there's going to be some sort of angle and separation in terms of the EMAs right about there, right about there, and if it moves in this northeast direction. Again, I would be just a little bit cautious here because the real rate's moving up, the US real rate. There is an interesting price pattern that's taking place. We'll only know if it really completes at the end of trade today, but we're getting what's called a reference candle reversal here. In other words, Friday's candle is showing the lowest low in at least 3 candles. Today's candle has taken out Friday's high. If we close above Friday's high, then we get a bullish reference candle. It's called a bullish reference candle. It effectively looks like this. Let me show you the pattern. So this would be Friday. Sorry, that would be Thursday. This would be Friday, so it's got the lowest low. And then this would be today. And then if today's candle closes above Friday's high, then we have a reference candle reversal. That's effectively a swing low, and that may suggest that we're moving in this northeast direction. But we'll keep an eye on the EMAs, right? If those EMAs start showing angle and separation to the upside. Okay, let's leave it there. Thank you very much, and please join me for our next video. Thank you very much.